It is clear we're starting to see some stability in housing as more home buyers are adapting to higher mortgage rates. Our next guest says Americans won't be seeing any sort of spiraling crisis in the housing market, at least not for now. Ben Eisen is with us. He is reporter for the Wall Street Journal. Ben, it's good to see you here. We just got those pending home sales seeing decline. But the dynamic that really seems to be dominating right now is that there are just not enough houses out there as we see mortgage rates continue to persist at relatively high levels. So what's your take as you think about the housing sector?
Well, thanks for having me, guys. It's been an interesting situation to watch the housing market over the past year. I think, when we were thinking about what was in store for the housing market a year ago, when the Fed was in the middle of raising rates at a super rapid pace and mortgage rates were going up super rapidly, there was kind of an assumption that we were going to have this big dip in home prices. And while we've definitely seen that in some areas of the country, the overall housing market has held up relatively well. And as you mentioned, it really comes down to that lack of supply. So even if you have this sort of reduction in demand, you still have a lot more demand than supply. And, home builders can't build fast enough. And what you're seeing is that people have really sort of become a bit more accustomed to the state of affairs right now. We've seen mortgage rates rise really rapidly, but they've been in sort of a range between 6 and 7% for much of the last year. And as a result, you see people start to get used to those rates, and demand starts to come back in. So you've seen a slight rise in existing home sales. You've seen mortgage applications up over the past couple of weeks. You saw that dip in pending home sales, but you saw that big surge in the Northeast, suggesting that there's definitely kind of this pool of demand that's still out there, and that's likely to kind of help bolster home prices. It's hard to say what's in store going forward, but for now we're not seeing this kind of precipitous decline in home prices.
Do you expect, one of the things that's been kind of trending, I believe, in social conversations over the past couple days now is the amount of rental properties that were purchased over the course of the pandemic for low financing. And now that there has been even this resurgence of travel, there still is a concern from some of the owners of those rental properties that they're not seeing enough traffic because there are other more affordable options that are out there. So all that considered, could we see a wave of potential new homes, existing homes, come back on the market? And what would that do in the current demand profile that we see right now?
It's certainly possible. It's on the existing home sales side, what you have is you have these people that sort of feel locked into not selling their homes. So maybe people who bought over the last couple of years, or even further back, but they like to move up to a new home and put their home on the market and sort of jumpstart this kind of movement of houses, across the housing market, but they don't want to give up a 3% rate, take a 6% rate. And that's been one of the sort of key factors keeping demand off the market. That said, if you see rates continue to stabilize and you see people get used to it, and be willing to kind of factor that into their budget, then you start to see those people put their existing homes on the market and jumpstart the movement of housing. And that said, there still is this kind of push and pull between whether it is better to rent versus own, in terms of factoring that into a monthly budget. And the rise in rates has definitely appended that calculation. But we are seeing kind of like the top, we had a lot of people move back into the rental market or, decide to rent rather than, buying immediately. And so you had that rise in rental prices. And now you're seeing that equation kind of start to rebalance again. And the rapid rise in rents that we saw has kind of topped out and is coming back down to earth. So, some of the kind of dramatic movements that we had last year and all of that is, starting to reverse or at least stabilize.
Ben, I want to pivot topics, but just briefly before we do that, in 15 seconds or less, what will be the true measure of whether or not the Fed wins its fight against inflation, at least as indicated by the housing market?
That's a good question. I think the Fed probably doesn't want to see home prices rising double-digit percentages in some of these cities that continue to be hot. the thing that makes it hard to look at the housing market right now is that it's a series of regional markets. It always has been, but you're seeing wide divergences. So home prices falling in some places, but surging in other places. So to see that kind of calming down in some of the hottest markets, I think is definitely one thing that they'll be looking at.
And Ben, talking of banks, I want to get your take on the banking sector. The Federal Reserve conducted its first annual stress test since the regional banking crisis this spring. We got the results yesterday. All 23 of the biggest lenders in the U.S. did pass. Some, like U.S. Bancorp, Citizens, and Truist, did feel a little bit more of a squeeze as we looked at the criteria. But as we near the beginning of the new quarter, big banks like J.P. Morgan and Goldman Sachs could be facing tighter profit margins as a result of all of this. So as you look at the results of the stress tests, as we look forward, what signs are you looking for from the banks?
The stress tests are pretty interesting because they put out the scenarios that they use to stress test the banks before the regional banking crisis that we saw, and those tests had sort of as their what they were testing against was a big recession in which interest rates decline, and you start to see a lot of the kind of the opposite things than what caused the regional bank failures that we had. So in many ways, it's sort of backward looking. And so you saw all of these banks come through and they looked pretty strong and they looked like they were doing well, which in many cases they are, but they also were sort of testing against a scenario that is not quite what we're seeing. So, that's just one thing to keep in mind when you look at those stress tests. And, I think we're going to be seeing other regulatory moves as we kind of move forward throughout the summer. There's more regulations that are kind of being considered right now, and other ways that the regulators are devising to kind of test the banks. And I think as a measure of bank health, the banks look good, but this was sort of backward looking, for the moment.
Ben, good to see you. Thank you. Ben Eisen, a reporter at the Wall Street Journal. Appreciate it.
Thanks for having me.